Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Today's sponsor is Audible. They're the leading provider of spoken audio and entertainment. Listen to an audiobook wherever and whenever you want. I do. For more information, to get your free trial, go to audiblepodcast.com/Lutz, audiblepodcast.com/LUTZ. You are listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1590 WPSL. Japan, big problems going there. Are we about to see the limitations of quantitative easing? Good question. Here to answer it is Ranting Andy Hoffman. Hello, Andy.
Hello, Kerry. Back from a very pleasant weekend, but now I'm going from Dr. Jekyll to Mr. Hyde.
Uh-oh, I better put on my tinfoil hat if that's happening. So what about Japan? It looks like it's imploding before your very eyes, doesn't it?
Well, look, they've created a hyperinflation in paper assets. By the way, not the real estate market. I don't see anything that shows me their vaunted real estate recovery is ever going to happen. They're still 25 years from the peak. And right now, all they've pushed up is the stock market, which is up exactly the amount that the yen is down, about 30%. So for the average person, and I read that most people in Japan, just like here, don't own stocks. The average person, especially in an import-dependent society like Japan, they just have had massive inflation and nothing to show for it. And now the upside or the downside of the QE is that their interest rates are rising, because if you're going to destroy your currency by that much, eventually you're going to lose control, or you're going to have to step up the QE. And since they're already doubling the money supply in the next 2 years, they're going to have to quadruple it, because right now the JGB 10-year has surged past 1%. When you have $12 trillion of debt, each percent is a big deal. And the same goes, by the way, over here, because whether you consider it because of talk of an exit from QE, which is BS, or a recovery, which is not happening other than this mini housing bubble, the fact is we have $17 trillion of debt, plus all the other debt, the $5 trillion at Fannie Mae and Freddie Mac that are off balance sheet, and all the unfunded liabilities. And each percent increase in interest rates will be $170 billion of new debt service costs, let alone that you have this housing recovery or bubble, whatever you want to call it, that's dependent on the low interest rates. So interest rates cannot go up here, but yet they have just surged to 2.11% on the 10-year yield. And remember, only a year and a half ago, we had the JP Morgan whale losses because rates went to 2.3% and all their interest rate derivatives blew up. So while the Fed plays all their games with supporting markets and the Bank of Japan, we are in a situation where so much rests on being able to turn around interest rates and bring them back down. Good luck on that.
Yeah, well, that'll never stop them from trying. And, they've kept them down pretty successfully for half a decade already, Andy.
Well, they've kept them down, but look at the situation we're in. I mean, you could just look back. I'm not blaming Obama specifically because this goes all the way back before him. But since he came into office, just because that's 5 years ago, the U.S. debt has gone from 10 trillion to 17 trillion. So, yeah, they've kept rates down at what cost? You know what the cost of gasoline on average was back then? It was $2.30 a gallon. Now it's $3.80 a gallon. We're here in Denver, we have low gas prices compared to most. We're just about at our all-time high. We have the lowest labor participation rate that we've had in 30 years. So what good has it done that they've kept rates down?
Good question. In the long run, you can't create wealth through artificially cutting your interest rates and trying to stimulate economic growth. It just doesn't work. It really never has, but that certainly never stops them from trying, does it?
But they're not trying. Well, they're not trying to stimulate growth. They're trying to maintain power. I mean, you could pretend that Bernanke is dumb and all these guys are dumb, and that, yes, I know they've been brainwashed into believing the BS that they say. But the fact is, these guys are financial guys, and they know very well that there's not a single documented case in history where such policies of printing money has ever worked? Of course it never worked. It always ends in inflation. And it's not like I'm saying to people, well, inflation's going to come. There's not a single person that's listening to this right now that doesn't know that their cost of living has dramatically surged. There are very, very few people that are benefiting from this. Most of all, the bankers who control the government, because they are the ones who get the free money. Now, if the QE meant QE for Kerry, Lutz, and Andy Hoffman, that would be great. That would be awesome if I got interest-free loans that I never had to pay back, and that I was told that the stock market is going to go up every day. In fact, if I was the person who was controlling the stock market, but I'm not. So the fact is, my cost of living keeps going up. My biggest payday that I've had in my business career was in the year 2000. Which was the year that the U.S. economy peaked. And God knows I've been right about everything I said ever since, and I worked my butt off. But the fact is, very few people benefit from this, and everyone is hurt by inflation.
Yeah, that's definitely the case. And you mentioned you had a barbecue over the weekend, and I guarantee you that barbecue was 25% more expensive than it would have been last year this time. And you paid the highest beef prices, assuming you're like us and you're not vegans over there in Colorado, the Rocky Mountain High State. Your burger prices, steak prices, higher than ever, hitting records.
Yes, I mean, beef prices are one of the many things that are at all-time highs. And by the way, at least in the United States, we don't have to import our beef. In Japan, they have to import everything because they don't have that much resources. So the fact is, every drop in the end just means much more inflation there than in most other places. And good segue, you talk about our barbecue, because I should be thrilled talking to you today, because I had, for the second time in a couple of weeks now, realtors pounding down my door asking if I'll be selling my house. And I wrote about it today. People can read about it. The fact is, the Fed has created a bubble, and part of that bubble is, of course, people moving away, as you and I talked a few weeks ago about moving away from the coast. In fact, I put in an article showing the top 10 most expensive cities in the country. In fact, they considered Brooklyn a city as number 2. Queens was number 5, and Manhattan was number 1. And then, of course, you have Orange County, California, San Francisco, Boston, Washington, D.C. I mean, part of it is people fleeing the coast to come to places that are lower cost. But the bigger part, of course, is the Fed has lowered interest rates to nothing, and there's been all this all the bad loan practices are back, and all the FHA guaranteed loans, and they've created a mini bubble. And that's all anyone wanted to talk about at our barbecue was the housing bubble, as Main Street is still crashing.
Yeah, well, I hope the bubble spreads to my place shortly and I sell it. But yeah, I mean, it is absurd. Prices are headed back up to where they were in 2006, where it was the peak. And what you see here is two things happening. You got dramatically lower interest rates, artificially low, and you've got the Fed, or the government, which now owns most of these defaulted houses, foreclosures, or a lot of them, or they're selling them off to hedge funds and saying you can't resell this house for 3 years. So they've artificially inflated the supply of funds available to buy a home with, and they have artificially cut the supply of homes available. And yet, in this housing bubble, I don't know if you caught Zero Hedge the other day, the fact is the lumber market is dead. Prices of lumber are going down, and that is not indicative of a housing boom.
Well, it's interesting because around here, and again, this has nothing to do with tooting my horn or my area. I can't even tell you how crazy the building is. It's off the charts because of exactly what I'm talking about. It's a lot lower cost of living out here. So the fact that it's crazy here, and as you say, it is a fact that lumber prices aren't just falling. They are in free fall. They are absolutely plummeting. Tells you that it's all bull. It's all about speculation. And in this time around, I haven't heard much about mortgage-backed securities and all that kind of stuff because, I mean, I'm surprised there aren't more of them since the Fed is buying $45 billion a month of them from banks. Now it's Wall Street that owns the houses themselves. Pretty soon, they're going to be offering not mortgage-backed securities, but house-backed securities. Yeah. Because Wall Street is the one that owns the house. It's slimy scum like Bain Capital and my favorite BlackRock that are buying up all the houses, and they're in partner with the government with their, as you say, they're limiting supply. They won't let other properties come to the market. So you're creating this whole artificial bubble based on these. I mean, I remember in 2007 when I moved here, mortgage rates were like 6.5%. I think they're 3% now. And for Wall Street, it's probably even lower. So the fact is that they've just created, just like they have in the stock market, which goes up every day, no matter the news, because of government, money printing and insider trading. It's the same thing that's going on with houses. And if anyone believes that they're going to make money in the coming years in the real estate market, good luck. Get ready for 2008 again.
Yeah, I just need to take a quick water break here, Andy, but we'll be right back. We'll be talking more about the effects of the bubble and what it's doing to you and your savings. I want to welcome our new sponsor, Audible. I've been listening to audiobooks from them for over 5 years now. I am a huge Audible fan. In fact, I've bought multiple platinum memberships. Platinum membership, you buy 25 audiobooks at a time. I just got done listening to the first 3 or 4 books of the Jack Reacher series, the one you probably saw, or maybe you didn't, in the theater, Tom Cruise movie. I mean, just a wonderful book, wonderful series, expertly narrated, and so many times I'm in the car, I get sick of listening to music or news or the radio. I just put my iPod on, plays the book, and makes that trip go by so quickly. To me, this is one of the great things of the information revolution of the internet, is that you can get over 100,000 books on your iPad or iPod or iPhone instantly. Another thing that they have is courses on Audible, the Modern Scholars series. And I've listened to lectures about World War I, Shakespeare, nanotechnology, detective novels. It's so enlightening. To me, Audible is a must-have killer app for the iPhone, the iPad, for my computer, wherever I am. I'm always downloading these books. Like I say, they're a sponsor, so check them out. They've got a free audiobook and a 30-day free trial membership. Just sign up at audiblepodcast.com/Lutz, L-U-T-Z. Again, audiblepodcast.com/Lutz. Sign up today. Like I say, this to me is a dream sponsor. These are exactly the types of things that I like to pass on to you because I'm such a fanatical, over-the-top Audible user. 5-6 years I've been listening, hundreds of books. I used to think I was a well-read person, and it's a little strange when somebody asks you, did you read that book? And you have to say, well, yeah, somebody actually read it to me, but they actually did a better job than I could have, so I don't mind it. But my friend Sean Perger up in Vancouver, he listens to almost as many as I do, and he can't get enough. I know you're going to love this company, love their service. I do. So check them out. audiblepodcast.com/Lutz. All right, and we are back, and I took my water break. I'm just dying from something here. I don't know. Something in the air, allergens, Florida being a semi-tropical climate. We've got every type of plant putting out every type of allergen known to man, and it's all like a soupy mixture, and it started to get quite humid out here, and it's just kind of driving my sinuses into hyperdrive. And yeah, we see this market in housing is just around here. There's tons of building going on, a lot of multifamily, but a lot of single family, but it's all directed, Andy, at that sweet spot, which here the limit on an FHA loan is $417,000. So you got two types of buyers: people buying luxury places who've sold their place in the Northeast, they're buying for cash, and then you've got FHA buyers who get that $417,000 mortgage. You have to put 3.5% down. You can get back up to 6% as a rebate for your closing costs from the seller. Winds up, you have nothing in the house. The only difference this time is that they will verify your income to ensure that you've currently have the income to pay for the house. Although if you lose your job, I guess all bets are off.
Hey, I wrote a piece a few months ago. I think it was called Leverage Insanity Returns, or something like that. And I'm talking about exactly all these things. The subprime lending is back. The cars, auto subprime lending is back. Read about these things. I never even heard of these Cov Light loans, which are apparently exploding. And that's the epitome of banks, not taking account of the risks in the real estate market, et cetera. It's everywhere. We're watching House Hunters. We've talked about it before, and you got people that are doing no money down homes. I'm going, you can really do a no money down home? Damn right you can, because it's the government now that not only is funding all the loans, but buying them all for Fannie Mae. They're an off-balance sheet company which has $5 trillion of investment, which doesn't count in the national debt. It is such, if you think about the fundamentals that the 2005, 2006, 2007 housing bubble were based on, they were amazing compared to what they're based on now. There was absolutely, utterly nothing under this but financial chicanery and 1% or 0% interest rates that the Fed maintains that they're going to keep down as I watch them start to go up. Because, and as I've written, every single time interest rates have gone to 2%, I've written this. I said they always manufacture an event to get rates back down. And if they can't do that this time around and rates keep moving up, then you know that some serious, serious chinks in the armor are being exposed. Because believe me, every single percentage point increase in that all-important 10-year yield is a major, major, major negative for the entire global economy, since so many interest rates are based on it.
And you're going to see, just like in Japan, where they thought they could control it all and all you had to do is print money, didn't work out too good.
This latest QE they had, which is, they call it QE 10, 11, whatever the number is, they are literally saying we are doubling the money supply in 2 years. That's their stated growth. So they are printing much more money than we are with a much smaller economy. It's completely suicidal. And then you throw in their demographic hell, which is another piece I wrote. You throw in the whole Fukushima thing, which has slowed down the nuclear, so now they have more energy imports. The fact that they're an import-intensive society to start with. The fact that their manufacturing has been losing market share to lower cost environments, and that they actually have had their first budget deficits in decades, shows you how screwed they are and how printing even more money than ever is only going to make things worse. My God, can you imagine if the dollar fell 30% against the euro in a matter of months? That's how bad it is for Japan, and they are importing everything from energy to food to minerals to you name it. They are importing it.
Yeah, amazing. And yeah, I'm looking, which one is it? The Economic Collapse blog. I think you follow that one too. And they have 40 statistics about the fall of the U.S. economy that are almost too crazy to believe. He sent it out a couple of days ago. And one of them is that home ownership is at its lowest level in decades. And that 50%, that the number of people who pay more than 50% of their income for housing costs is also at a record high. And somehow from this, we're supposed to have a recovery.
That's that Michael Snyder guy, right?
Yeah, Mike Snyder, yeah.
Yeah, he puts out good work.
Yeah.
Yes, home ownership is down, renting is up. Of course, rental prices have been up because all the people have lost their homes and they needed to rent. And now for all the people that are excited about the housing bubble, it just means people have to pay more money to buy houses. It's called inflation. So at a time where you have the lowest labor participation rate, you have horrible earnings on Wall Street, you have declining real employment, now it costs more money to buy a house. So who is this helping? Oh, that's right, the Wall Street banks and the BlackRocks that own all the houses that they were financed with free government money. It's just too surreal to imagine, but that's the life we live in. And if anyone thinks that the Dow going up 1,000 points or 2,000 points means anything, then ask yourself, what does your life look like today compared to last year? Oh, do you have higher consumer confidence because the government says so? Well, maybe you do, but I guarantee you have more debt and more inflation.
Yeah, here it is. I'll go to number 17 on his list and number 18. Back in 1950, more than 80% of all men in the U.S. had jobs. Today, less than 65% do. And number 18, at this point, an astounding 53% of all workers make less than $30,000 per year. So that's not the sign of a healthy economy for sure.
No, the new jobs, everyone knows it. I mean, it's like, you know, the unemployment reports come out, and the mainstream media will say, "Oh, look, there's 160,000 jobs. It's so good." Of course, you don't need to be spun to know that that doesn't even keep up with population growth. And it's also fact, the numbers that come out of that, it's a fact that they are, you know, a large majority are minimum wage jobs. They're part-time jobs. I believe, in fact, I'm going to be writing about this, and I have written about it. I think that they've completely changed the methodology again of the NFP report to report part-time jobs as full-time jobs. Because I can't believe when I see the numbers of how all of the new job creation is part-time minimum wage, and all of the job creation is in the 55 plus and 24 minus age groups. Those are by definition the kind of jobs that don't support families.
Yeah,
it's for people who don't even have families.
Absolutely. And it reminds me of a while ago, the Fed manipulated the money supply figures where they started treating checking accounts, demand accounts, as savings accounts, and therefore totally took them out of M1. So you saw no increase in the money supply, even though the amount of money in these checking accounts were skyrocketing.
Right. And M3 was taken out literally the month that Bernanke went into office in 2006. We stopped reporting it because we said it cost $1.5 million a year of administrative costs. And as of the third quarter, we're going to be having an extra 3% of GDP increase because we're adding intangibles as GDP. In fact, I saw one of the Fed governors the other day say, "Yes, I think the economy is growing great. We're going to see 3% growth this year." And I'm like, dude, you just told us that you're adding 3% of phantom GDP, so you're telling us it's really zero. We should consider this good. I mean, they've changed the CPI a million times. They've changed the employment a million times. And heck, now all the jobs come either part-time jobs or from the birth-death model. Now they're changing GDP, and they took out M3, and now they're even changing M1. I mean, what are they going to have next? M-1?
Yeah. Well, the ability of the powers that be to pervert and to distort and just to lie seems to have no limits. But I think there is a limit, and that limit's going to be the ultimate collapse of the whole system when it all comes crashing down.
Absolutely. That limit is the limit of history. It's been a limit every time. You can't print your way to prosperity. We are not prospering now. We have not been prospering for a decade and a half right now. No one is prospering. Europe is at its low point. Japan is at its low point. China reports that its PMI is contracting, yet they have 7.5% GDP growth. I mean, they are just blatantly showing you that their numbers are fake. And yet people see the housing market up for a couple of months, and they say, well, it must be a recovery. I have higher consumer confidence.
Yeah, that'll really help confidence, but sometimes confidence is misplaced, as it certainly is right now, and eventually reality wins out. When? Impossible to know or impossible to say, but eventually, you can't ignore reality, or you can ignore it only so long to your detriment.
Agreed, 100%.
And on that note, we will take our leave, Andy. So any particular things you're watching for the coming week that you should really be keeping an eye on?
Well, if you mean like a special event like last week, Bernanke speaking to Congress, no, there's nothing on cue. But I guarantee you that a million things will come on. We were talking just before about the IRS scandal. I can't even keep up with these scandals. I don't even pay attention anymore. There's a scandal a day. There's a crisis a day. But if you want to pick one thing, just watch that 10-year yield, because if they can't keep it under control, you're going to see major, major changes in even what the MSM is talking about.
Hey, yeah, and you mentioned before option expiry was today. And
yeah, but just expired as we spoke. Yeah, so look, gold has been capped now. Today was a perfect example, exactly 12 o'clock, Cartel Herald, exactly at 1400. This is 9 straight days they capped it at 1400 on the dot. Yes, part of it is because of COMEX option expiration, but the bigger part, in my view, is I wrote in a piece last week, I called the New York Gold Pool. I truly believe that the cartel is the government, the powers that be, are trying to replicate the London gold pool, which capped and supported gold at $35 an ounce. I believe that they are trying to covertly, by sales of whatever gold they have left, and of course derivatives, to covertly keep gold around this 1350, 1450 range, and 22, 23 for silver. They know they can't get it much lower because it's already way below the cost of production for almost every mine in the world. And of course, there's massive physical buying underneath it. I think that they could do it. But then again, they thought they could do the London gold pool. And they kept it at $35 for a couple of years. And the next thing they knew was $900. So, I watch, but I'm not worried so much about COMEX option expiration. I'm worried about, just the whole fabric of the global economy falling apart and all these pathetic efforts to save it by printing money and manipulating markets.
Yeah, you know what they say, Andy. The more things change, the more they stay the same. The hand just rearranges the players in the game.
Correct.
And we're going to get some new players and some new hands rearranging them, but the end result's got to be the same. And the New York gold pool will face the same eventual fate that the London gold pool did, and can't happen soon enough, because gold really is the canary in the coal mine, and that's how you know when monetary policy's out of control, when you see what's happening with gold.
Right.
And on that note, all right, and now for my next act, but seriously, we will talk to you next week, and just put up a sign in front of your house, no realtors on this property, thank you.
Very good.
Take care.
All right.
This show was brought to you by Audible. When it comes to audiobooks, there's only one place to go. That's audiblepodcast.com/Lutz, audiblepodcast.com/LUTZ. Sign up today, get a free 1-month membership and a free audiobook. And send us an email. Let us know how you like that book.